Hello everyone, welcome to my class. I welcome you all again in the world of accounting, and our today's topic again will be a cash book. As you know, in our previous class we discussed about that what is a cash book and how to draw a performa of a cash book. But dear students, our today's class will be little different. We will learn some amazing new concepts of a cash book. So let's see what we will understand today. Dear students, we will learn about what are contra entries. We will also learn that how a cash account is different from a bank account, even though both are current assets. As you know from my previous class, that current assets there is a heading called cash and cash equivalent, in which we put both the cash and bank balance. We will also learn today that what is the process of writing the main content of a cash book. As you know, whatever the proforma we had discussed in our previous class was regarding date, particular, and ledger folio. They were just the part outside part of the body of a cash book. But today we will learn about the main content, means the main internal part of a cash book. Very soon, when I will start teaching you, you will understand what is the main content of a cash book. So let's start our today's class by understanding about what are contra entries. As you can see, we have the topic contra entries. You can see this is a contra entry and this is also a contra entry. As you remember, cash is a current assets, comes under cash and cash equivalent in a balance sheet, and a bank is also a current assets, comes under cash and cash equivalent in a balance sheet. So if a amount is transferred from one of the current assets cash and cash equivalent topic to another cash and cash equivalent topic, that is cash, you know very well that there will be no change because both cash and bank are current assets and both comes under the same heading cash and cash equivalent. So such type of entries in cash book is called contra entries, and they are only two. One cash account debit to bank account and one is bank account debit to cash account. So whenever you see both of these journal entries, you will directly say it as a contra entry. Now let's start understanding that both cash account and bank account, because cash and account and bank account both are current assets, but still the way we treat them is little different. Let's see the story behind such way of dealing with them. As you know, a cash account is a current assets. As you know, a bank account is also a current assets. But my dear students, cash account is a real account and a bank account is a personal account. This is the only point where cash account is different from a bank account. Now before moving further, we must know what is a real account and we must know what is a personal account. Before starting understanding the basics of accounting, we must know what is a real account rule and what is the account rule of a personal account. A cash account has a very simple rule, is that debit what comes in and credit what goes out. And a personal account has a rule that debit the receiver and credit the giver. It means the way we write cash in a journal entry and the way we write bank in a journal entry doesn't mean the same. The way of putting them in their respective places in a journal entry differs because the rules they follow. In order to understand this particular topic, let's understand it with the example. You received a cash from sales of good 2000 rupees. As you know, the journal entry will be very simple, that is cash account debit to sales account 2000. Now what we have to learn here is that cash is debited in this entry. Cash is debited in this entry because cash is a current assets. Whenever cash comes in your business, you treat it as a current assets. It is your own money. That is the reason cash is debited. But in order to differentiate it from the bank, we have to understand the rule with which it is entered. The rule with which it is entered is very simple. As you know, debit what comes in, credit what goes out. So cash is coming inside the business. So cash is debited because it is coming inside the business. So cash is debited 2000 rupees. But my dear students, it doesn't happen same with the bank account. Let's take out the same entry again. When you receive a check from sale of goods 2000 rupees, both the entries are same, but the difference is that you receive a check this time. So instead of having a cash, you will start writing a bank. Now, what is the similar thing you see in both of them? The similar thing you see in both of them is that both are debited because both are current assets. If your assets are increasing, you always write the asset's name on the debit side. You receive money in your bank, you debit the bank account. But the rule that is followed by the bank account is different from the rule followed by the cash account. The rule bank account follows is that debit the receiver and credit the giver. It means the person who receives something from you will be debited because in this case bank is receiving 2000 rupees from you. You are depositing your 2000 in the bank account. That is why debit the receiver. It means bank is the receiver of the money. So we will debit the receiver. It means bank will be debited. So what we learn here is that cash and bank both are assets. That's why we debit them. But cash follows the rule of the real account and banks follow the rule of a personal account. Whereas in the category of a personal account, banks follows an artificial personal account. So whenever you write bank, follow the rule debit the receiver, credit the giver. Whenever you write cash, follow the rules debit what comes in, credit what goes out. Now let's understand an amazing concept that is the main content of a cash book. As you know from my previous class, we learned about date, particular, ledger folio number, cash, bank, date, particular, ledger folio, cash, and bank. We learned that there are total 10 columns in a cash book. But that was only outer part of a cash book. Today we will learn what we write inside the cash book. So let's start understanding from the left side. As you can see, this is the year of 2025 and we have the first day of January, that is January 1. The first thing we have to understand is to balance brought down. Whenever a cashier bring the balance of the cash book from the previous month, that is the month of December to the January, he always write the balance to balance brought down and will write the balance on the debit side, that is on the left side of the cash book. So whenever you bring balance from the previous month, because you always have balance in your cash book, so you always write it on the debit side by the name to balance brought down. Remember, we always write debit side to. So as we can see, we have in the starting of the month in cash account 25,000 rupees and in the bank column we have 55,000 rupees. Now, once we write down the starting balance, we can start seeing what actually happened during the month of January. As you can see in the red color texts, I have mentioned that what has happened in the month of January. In the month of January, only one transaction has happened, that is on January 2. On January 2, you purchase by paying cash of 15,000 rupees and you purchase something by paying cash of 43,000 rupees. According to our question, only one thing has happened in the month of January, that is you paid 15,000 by cash and you paid 43,000 by bank because you purchased something. You purchase a goods. On the right side as well, we follow the same sequence. We write down the date 2025 followed by January 2. We write down the transaction by purchase, ledger folio number 93. As you remember, ledger folio defined that where will be the purchase account in the ledger book. The purchase account in the ledger book will be on the page number 93. So because our month has completed just by one transaction, it is time to end the month. When you end the month, you write down on the left side, January 31 is the last day of the month. In the starting, we have cash balance of 25,000. We will minus it from the cash we have actually paid in this month, that is 15,000. The remaining balance will be 10,000 that we will write on the right side. In the bank column, we were having in the starting 55,000, but we paid 43,000 this month by purchase. So the only amount left with us is 12,000. Now what we have learned here, at the end of the month on January 31st, the right side will be written as by balance carried down. It means how much money you will carry to the next month. So you can see that on the right side we will carry 10,000 rupees to the next month and 12,000 rupees to the next month. And what is our next month? Our next month is February. As you know, cash book always have debit balance. It means we always have money in our pocket. Now we have 10,000 in cash and we have in bank we have 12,000. So we will transfer this to the next month on the left side of the cash. The left side shows the debit balance. So in 2025, in February 1, we have two balance brought down. Two balance brought down because we brought down the money from the previous month. So 10,000 in the cash and 20,000 in the bank. Sorry for the mistake. We have to write down cash in 10,000, bank in 10,000. For ledger for you, I really apologize. So after making this correction, we have seen in cash we have 10,000 and in bank we have 12,000 when we start our new month. So dear students, what we learned today is that what are contra entries. We also learned today that both cash account and bank account are current assets, but still the way we treat them and we wrote them, they have their own different logics. We also learned that what is the how to write down the main content of a cash book. We learned the concept of to balance brought down and by balance carried down. Remember, remember, all those things that you saw in the dark black color were the things we have learned in the main content. The item that you have seen in the red color is the entries that we have done during this month. So dear students, thank you so much for listening to our class. We will see you again with another amazing topic in our class.